come and listen. We got a lot of new folks who have just popped in, and really appreciate you doing that. What we're going to cover tonight is every Sunday night we have an open mic. It's a period where we normally are unstructured and members bring their questions, but tonight we asked one of our members, our colleagues, one of the moderators here, JB, to give us his perspective on Gamma Edge, and he gracefully or graciously, both I guess, said yes. So we're gonna start off with that, unless there's other questions or comments that can be addressed in a pretty short period. We can just turn it over to JB and I'll back into the woodwork here and let JB run the show.
Hey, yeah, Paul, real quick before you start, JB, everybody, if you all have questions or anything, either DM me them if you don't want to ask them in the public forum, or just post them in the voice channel chat, and whenever JB's done, we'll do a Q&A as long as y'all got them. So, yeah, just as a question comes up, I'll just make note of them. We can run through them at the end. So.
Yeah, and if you're not familiar with Discord's organization, you should have access. I'm going to tag everyone who's in here. Just post your questions here, and we should be able to see them. So I'll monitor this also so that we can watch. Yeah. So everyone, all the new folks who are just visiting temporarily, feel free to post here. So, all right. Well, with that, turn it over to JB.
All right, great. Thanks, everyone. Happy to be able to share some of my experience with everyone tonight. This is normally the spot in the video where Taylor or Paul says, please pause your players and read through it.
Paper trades only, baby.
That's right. I had my own little disclaimer in the agenda section just saying, hey, this is my personal story. Everything I'm sharing is to hopefully help someone. Shouldn't be misconstrued as any type of investment advice. I'm definitely not a professional. Just want to get that out of the way. So tonight I'll talk through my background, what my investing looks like today, the Gamma Edge tools, and then a few critical items that I think are super important, and that is the tick model, the GEX ratio, and then how I try to trade and kind of put this stuff together. So we'll jump into it here. All right, so my background. I work in transportation and logistics. I'm in my mid-40s. My first job out of high school was on a delivery truck, putting furniture together in people's homes. And I've been in heavy goods transportation ever since. I've kind of what got me all into trading was I was pretty late in my career, decided to go back and finish a college degree, got a bachelor's in economics. I spent about 6 years doing it. In that period of time, I took a lot of finance classes, got interested in trading, and I have a personal goal of starting an MBA next year. So my trading experience is minimal. In the big scheme of things, I've only been trading since 2019. Started off with some finance classes and paper trade class in college. It expanded to reading a ton of books and kind of culminated in about 11 months ago, meeting the Gamma Edge founders in a Discord site. Got invited to come in when we were doing our beta stuff way back in October of 2021. Got the chance to tag along on a couple of beautiful trades Paul made on some stocks that were moving, were Gamma related, and I've been hooked ever since. So my investing is I'm primarily a swing trader in my trading account. For me, what I've learned here is all trades begin with a scalp, and then I buy and hold in my 401k. I roughly have about 20% of my personal investments in my brokerage account and 80% in 401ks and tax-advantaged accounts. I'm looking to get that ratio a lot bigger in brokerage through successful trading. All right, so I am a paying member of Gamma Edge. I love the service, love the site, and want to tell you what I love about it. So first and foremost, it's the community. There's brilliant people in this Discord that work very unselfishly, and the group evolves. And I think it's really a great example of group learning at its best. There's a lot of this stuff that I've seen evolve quite a bit in the last 11 months, and it continues to evolve. The next thing, kind of going down the list here, is the market model and what I've learned from it with Taylor's markets updates, the morning call, and then the tick ribbons have really all just really changed my trading. And for me personally, I travel a lot for work. The morning updates and the daily market updates invaluable for staying in touch with what's happening in the market when I potentially have zero time to look at it during the day. Key items that I think are most valuable, that really bring value in the Gamma Edge server, are the chart bots, the scan tools. For me personally, the Gamma spreadsheet, Fishpond map that's been an output of that, the automation scripts that bring GEX levels into TradingView and things of that nature, Trading Ticks AI and Options Fanbot. One thing I didn't list here is, but it goes back to the group of brilliant people working together unselfishly to learn. There's a lot of individual contributors that have built different things that improve our trading, whether it's some of the tick models James has put together in TradingView, or some of Panther's work in TOS. There's a lot of things just below the surface that the members of the community are doing with the tools, and it's great to be a part of all of that. Overall, there's unmatched value in Gamma Edge with the access to data and the back-tested proven edges.
Hey, so JB, real quick, I'm gonna butt in
Yeah.
real quick. So going back to the community real quick, just for the new people. So our community, we consist of small accounts, large accounts, new traders, very experienced traders. So I mean, we kind of have a robust community of all shapes and sizes. And then just for the market model and kind of the updates that JB was hitting about. So we produce two daily contents. The morning version being what Paul produces. This is a pretty gamma intense morning update before the market opens. Sometimes when the market opens, just depending on schedules. And then at night, I will produce a kind of state of the market video, kind of hitting on gamma structure, tick model, kind of price action and whatnot. So just a little bit of background of what JB was hitting on there. So continue, sir.
Yeah, great. I'll also say I have no problem pausing at any time if people have things to add, or it makes sense to ask a question right in the moment. It's not going to throw me off. So the king of all indicators. I learned this here in Gamma Edge. For me, it's the tick model. It tells me where we are. It tells me if I should be going long, and I've really grown to trust that I can follow the tick to keep me in line with the institutional money flow in the market. There's two main components of this to watch. One is a white ribbon that is a cumulative tick line and fast moving averages. And the other one is a colored ribbon. It has longer term moving averages. And you'll see red and cyan in a couple slides. There's 3 time frames that this model informs for me. One is short term. It really helps me to understand whether I think we're moving up or down. And the reality is I don't know where we're going to move next. I use the tick to understand where, from a probability standpoint, what that continuation looks like, and I try and jump in once continuation has been confirmed. And that happens at short-term, medium-term, and long-term events, and then it really helps me position on a trade. And in general, the rule I've learned some hard lessons around is not to fight the tick. If it's telling you the market is short-term downtrend, don't try and play certain reversal setups. If it tells you your long-term uptrend, don't try and anticipate tops. It really helps. So let me just jump into some specific examples of what that looks like. Looks like we got a ton of people on tonight, and some of you may not be familiar with what I'm about to show really through the rest of the presentation, but I urge you to stick around, try the free trial, and we can all jump into this more as the weeks go on. So short-term directionality. It's really the primary thing that I'm watching on a daily basis. I've got an example of what the tick ribbons look like in the TradeStation chart here. This white series is specifically what I consider to be the short-term trend. This white bold line is a cumulative tick line. If the white bold line is leading to the upside, I'm looking to see a continuation to long positive trend. If it's leading to the downside, I'm looking to see a continuation of a negative trend, and I want to trade in those directions. I don't want to try and take a short or negative position if my white bold line is above the white ribbon, and I don't want to necessarily go long when my white bold tick is below the short-term ribbon. These crossovers are here on the left. So this is a great example of what we see often with the tick line. We see it pull back, consolidate, and come out. That coming out is a continuation to an upside, and that's a great signal. Just like the picture below that, where the cumulative tick is coming through the white ribbon, and it's a continuation to the downside. I want to be long or short, positive or negative, as it lines up with the continuation of these lines. So I don't look to trade reversals. I look to trade confirmed continuations, and those can come in a couple different ways, but usually it's a retest of some sort or a taking out of a previous high level that confirms that continuation within the short-term tip ribbon. Any comments on this from Paul or Taylor? Any qualifications you want to throw in there?
The one thing I'll say about the cumulative tickets, this is made up of buying and selling presented to the exchanges. So, I mean, this is, I don't want to say real time, but I mean, it's as close as we can get to kind of what market participants are doing. So, this is kind of a key component of what we do here at Game Edge.
It is real time. It's we use 1 minute bars for that reason. You can go shorter bars if you want. I wouldn't recommend going longer bars because it literally is the net aggregation of ticks within that bar interval. We use 1 minute as a default. I know James in his TradingView tool has taken it down pretty granularly, and that's great. If you've got the machine and the membership there to do that. So highly urge everyone to stay at 1 minute and or shorter, and you'll get very good signals about what's happening across the exchanges.
Thanks, guys. So just looking at, there's two ribbons on this screenshot. There's the white ribbon here and the colored ribbon here. And those two ribbons and where they're at in relation to each other is what moves us into the medium trend. So this may be a little hard to read. There's a lot of lines on the screen. But what I tried to illustrate here is if your white ribbon is above your colored ribbon, regardless of ribbon state, and we'll talk more about that going into the long-term trend, all these ribbons have a state. Are they positive or are they negative? There's a leading line for each ribbon. If that leading line's above, it's in a positive state. If that leading line is below, it's in a negative state. This would be an example of the negative state on the short-term white ribbon. That's a short-term negative. signal right there, but it's above the colored ribbon. So if the white ribbon is above the colored ribbon, regardless of ribbon shapes, that's medium up. If it's below the colored ribbon, that's medium down. And again, continuation is key here. And I love it when you see continuation confluence where you might see a white ribbon pull back to the colored ribbon and then bounce back up. That's a very strong signal. Same on the downside. We've seen those be very strong as well. The other thing I'll point out is slope matters. So the slope of these ribbons, obviously more slope, more strong the move is, less slope, the more flat it can be. The white ribbon is your primary short-term indicator and where it sits in and of itself. Where the white ribbon is in context to the colored ribbon is your medium trend. And then we'll move into the long-term trend of the tick, which is how this ribbon looks itself. The colored ribbon you see here starting with red on top and cyan on bottom, that's in a positive configuration. And that would be in a long-term up state, given the state of that ribbon. When we move into the long-term positive or long-term negative, we see this ribbon compress and then invert. Here's an example of it coming out of a negative state and moving to positive. It's where the shorter term red lines cross through the longer term cyan line. And in a long-term positive trend, you'll see the cyan move to the bottom of the ribbon, and the ribbon itself will be upward sloping. The downward setup is the opposite, and that is where your cyan ends up on top, your red's on bottom, and your slope is downward. This shows it here. So when we look at how all three of these come together, with this white ribbon being on top of the colored ribbon, that's your medium term positive. Obviously, your cyan's coming out onto the bottom and your red's coming out onto the top. That's converting into long-term positive. And then once you get this crossover here, you're really getting all three modes positive. The market's agreeing on all time frames, and you really should just be looking for long-term trades or long trades at that point. Definitely not looking for reversals to the downside. That's you're starting to get all three of your market timings all aligning. So it's a great place to be going long. Let's talk about some of the back testing. Paul, do you want to jump in here and talk through what EdgeRater has taught us about that long-term ribbon setup? Maybe Paul had to step away.
Yeah, I mean, I'll jump in for Paul at a high.
I'm here. I'm here. It's, 3 years of COVID, and I still haven't figured out how to use the mute button. Right?
No problem.
So just real quickly, we've partnered with EdgeRater, and to our knowledge, we're the first who's able to backtest gamma all the way back to 2013. And so that gives us a unique capability to do exactly what JB is talking about here, is start looking at, how's the cumulative tick work and how do other trades. And later we'll be talking a little bit more about some specifics here. But what this is really focused on the testing of the ribbon. And there's really some just key things to take away. So on the left here, where it says hold 1, hold 2, hold 3, that's literally the holding period. And what this is showing, as you go up in holding period, the longer you persist in that trend, if the trend is intact, of course, the better the win-loss rate is on the overall systems here. The other real key takeaway that I want everyone to be aware of is where it says MD50. MD50 is your maximum drawdown 50th percentile. That's average by definition. And so what that means is when you look at like hold 1, hold 2, hold 3, you see that there's pairs. When the ribbon is on, which is true, and that's highlighted in green. And then when it's off, it's in white. And you can see in that MD50 column, like under hold 1, it says 4% and 8.3. So what we tend to see, and we know this because of the way gamma behaves and how we're starting to time the market, is that volatility dampens. And so just as a natural outcome, not even testing gamma here, just looking at the cumulative tick, what we see is the phenomena of dampening volatility in uptrends. And you actually see this as you go forward here. So the takeaway from here that is that once we get into these uptrends, we do expect volatility to dampen, and volatility cuts both ways, cuts to the upside as well as to the downside. But here, it's important because it's volatility that typically makes us exit these trades. And what this is showing is that as your holding period increases, as the trend remains intact, volatility gets really, really knocked out, and it limits. It's limited under 10%, whereas you can see all the way at the bottom under 15, and this goes actually out to 50 days. Volatility expands when the CT is off, but is actually very favorable while the CT is in the trend. So just keep that mindset as you look at this stuff, that having a market model and being able to integrate it with your overall positioning, whether you're long or you're short, is really, really important. So I'll leave it at that and kick it back to JB.
All right, great. Thanks, Paul. Again, the back testing that goes on across the strategies is super unique, extremely beneficial part of Gamma Edge, and frankly, it's what gives me such great confidence in my trades. So I want to move into something we call the GEX ratio. For those of you familiar with the server, sorry, I'm not sure why that's doing that. Some of you familiar with the server know what these wing charts look like on the right. Wing structure of the negative and positive gamma. A green wing higher than a red wing indicates more positive gamma in the structure. A red wing higher than a green wing indicates more negative or put gamma in the structure. We call this call GEX and put GEX. The GEX ratio is simply call GEX divided by put GEX. A 1 is essentially parity. If this number, this GEX ratio, the call GEX divided by put GEX, is simply a numerical representation of the wing structure as it relates to which one's higher. How they're structured in time might affect the shape of the wing, but what we're looking really at is there more puts or more calls in the structure? What our back testing has shown is that buying a low GEX ratio across certain equities has a very high win rate if you hold them and then let them go at the right time, which is all pretty flexible. And Paul notes down here, not all equities are under control by their options. So sometimes things are correlated to the GEX ratio, sometimes they're not. The beauty is we have the ability to backtest that and know which ones are truly impacted by their option volume. And we can talk more through that. We take this GEX ratio. There's some spreadsheet work that gets done to where on a daily basis we measure what that GEX ratio is, and then we heat map the history of that. So you can see where SPY is at 1.01 here. If I was going to paint those wings, you'd have wings basically the exact same size. As you get into these very low ratios like 0.44, the red wing is really dominant and the green wing isn't. And then those ratios change over time. These are the key liquidity stocks that we've been watching this on, and it's been pretty enlightening, quite frankly, to start to visualize it this way, and it's led to further back testing and further strategy discovery. And this, in many ways, is a hallmark of the group learning I talked about that was part of Gamma Edge. I think in many ways, the way this community works will be fairly robust and evolving with market changes and trends. Because in very much in a real-time way, we're able to identify new ways of looking things, backtest that, and then capitalize on what makes sense and what doesn't. Anything to add here, gents?
Good.
We also watch. Heart Pumper gave us this name called the fish pond. Kind of looks like the fishing depth scanners, but we also look at the fish pond for our sector ETFs, and really we have the ability to look at any set of equities. We just look at these specifically. What I believe is this shows us how the money's rotating in the market. What's gaining strength? What's losing steam? GEX ratio will show that. The different sector ETFs respond more strongly or less strongly to their option activity. So there is some of that in here, but largely you can tell where the strength is within the sectors, and this can help do what I'll talk about later in the presentation around edge stacking. And if I'm in an uptrend in a market model and I'm looking for positive gamma stocks and I'm trying to trade movements upward in positive gamma stocks, understanding what's happening in the underlying sector is another piece of information. So, Paul, if you're okay, I'll let you take this one as well. There's just some phenomenal edge here on the fish pond entries. I can go back to previous charts if you need to explain some of these. Just let me know how you want me to shift it.
No, and I apologize for just tables of information for folks. A lot of folks are visual and not used to reading rows. And again, we can go back and forth here.